I don't know what the future holds for the market. Look, I've got a philosophy, and it was the philosophy of the Clinton and Obama administrations, that we focused on the fundamentals of the economy. When the markets had a good day, we didn't regard that as some kind of sign that we were geniuses. And when the markets had a bad day, we didn't regard that as a referendum on our policies. So I think the problem is not with Larry Kudlow trying to avoid blame for what happened yesterday. The problem is that the president and the administration have been regarding the markets as the lodestar for judging the quality of economic policy for months and years now. I think that they've built a temporary boom. I think I was the first to call it a sugar high quite some time ago, and I think that's right. And it has lasted longer than many people expected, but that's because they've done more to feed more sugar in than anyone would have expected in terms of these extraordinary tax cuts, the substantial expansions in the budget deficit that have enabled such a huge quantity of stock buybacks this year, and that have allowed measured after-tax earnings to go up so rapidly. So I don't have a view as to which way the stock market's going to move next, but if we're going to be serious about economic policy in this country, we've got to get beyond using month-to-month or day-to-day stock market fluctuations to judge whether we're going in the right direction or the wrong direction.
What about what the president said about the Fed? He's blaming Jay Powell, saying they've gone loco, they're moving too aggressively when it comes to rising interest rates. Is there any truth to that?
I think very little. I think Jay Powell is doing a good job. The Fed has to make some very difficult judgments. For a long time now, I've believed that the dangers are probably more on the tightening side than they are of staying easy for too long. So in debates about monetary policy, I myself would tend towards the dovish side. But that's not the key issue. The key issue is that when the President of the United States blatantly politicizes the Fed, he makes it much harder for the Fed to ease if they think that's what's appropriate. Because no responsible central bank wants to look like it's bending to political pressure, and it will damage its reputation and credibility if there's an appearance of bending to pressure. And so actions like the president's are counterproductive in the president's terms, because they make it much harder for the Fed to adjust in an easing direction or in a slower tightening direction if they think that's appropriate. So I don't understand the rationale for comments like this, even if there was a basis for believing what was being said. And I think the comments are totally inappropriate in terms of their merits, but I think they're also extraordinarily ill-advised because of the difficult position it puts the central bank in. That's why previous administrations have very systematically, now for a full quarter century, avoided getting into this kind of commentary on the Fed, because they know how damaging it is and how much it creates pressure on the Fed to demonstrate that they're not responding to political pressure. I think Larry Kudlow would use his time better explaining that to the president than constantly trying to cheerlead that we don't have very real economic challenges, when every worker in this economy knows that we do have very real economic challenges, and I don't mean economic challenges that are caused in Beijing or Mexico City. I mean challenges that are caused in the United States of growing debt, rising inequality, limited progress in middle-class living standards,
Secretary
rising
Summers.
sense of anxiety about people of their children's future. That's what he should be spending his time addressing, not
Secretary Summers.
cheerleading, and certainly not defending the bashing of the Fed.
All right, given our limited time, I just have one more question. You know, Mr. Kudlow did use a term you say that you coined to sort of describe this economy. He said it's not a sugar high, and in fact did speak to why he believes economic growth above 3% is a strong possibility, to sort of paraphrase. Why do you believe otherwise when he's citing increased capital spending? The belief that the tax cuts are going to have an effect far beyond the anniversary of those tax cuts, the decrease in regulation. You've heard the litany of different reasons cited by the administration. Why don't you believe it?
Two core arguments. One, experiences that when the deficit increases, that temporarily accelerates growth. But when the deficit stays high, it slows growth down. And we've gotten the stimulus, and now we're going to get the addiction. It's just like taking an upper. You're up for a little while, and after that, you have to keep doing the same thing to even maintain the feeling. And that's what these deficits are. They're a steroid in that sense for the economy. That's the first thing. The second thing is that if you look at the growth in the economy, a very substantial part of it is cyclical, caused by declining unemployment. And maybe the unemployment will decline to 3. Maybe it'll decline to 2.7, but it's not going to keep declining forever. And if you strip out the cyclical component that can't be permanent, then we've really got quite mediocre growth rates, and the administration has done nothing to change that. The third reason is that the policies that the administrations are pursuing that are counterproductive have their negative aspects only with some delay. Limiting immigration slows entrepreneurship over time. Reducing inputs to U.S. firms through tariffs makes them less competitive and less likely to locate here over time. Over time, the economy pays a price for deterring foreign investment. Over time, the burden of larger deficits compounds. So this is a classic, this is the same thing as a company that juices earnings by pulling sales forward or putting off ordering new supplies. You can get the impact in the short run, but it's a huge mistake to extrapolate it in the long run. This may well be the most short-sighted set of administration economic policies certainly since the Second World War. And, you know, it's true that if they double down on them and double down on them again and double down on them again, they may produce, they may keep the sugar high going, but not forever, and they set up for larger problems later.